Uh, hey, it's Steve Zelenardo here with Remax Experts, Zelenardo Associates. Sorry about the noise. We have a situation here at the office here in Kleinberg, so I think that's a snake for the plumbing. There's a snake in the drain, and something's going on with the toilet. But ultimately, let's keep it going here. Our current inventory right now is 12,770 units, so down 200 since last week. Sales have actually increased back up to 1,458 units. And if we saw, when I reported last week, we had that big dip. It was like a 35% drop off in sales. It's quite weird, right? We were at the height of like 1,800 sales, and it dropped off to about 1,100 sales. Now we're back in between there, which is great. It's ebb and flow, nothing to be alarmed at here. Well, even last week we sold a ton of our listings. We did a bunch of Mike has and a bunch of our buyer sales. I sold one of my investment properties contingent on a few contingencies rather, so finance inspection, solicitor review. So there's a bunch of stuff that it has to go through, and then ultimately, hopefully, we sell it. One of my building lots, we have it for sale too. We're getting activity on that. Hopefully that unloads too. And again, we're going to move this money into the build section of our division going forward. And we'll talk a little bit about that in the middle of this video. But let's talk about another thing. Because last week, when we reported the inflation rate reversing, we had a reversal because obviously inflation rate has to be down to 2%, and we were at like 4.1, and then it went jack back up to 4.2, 4.3%. So it's in reverse. So basically, whatever Tiff Macklem did at the Bank of Canada to get it down from that, the height of the 8%, 7 and change, whatever they were at, now they're at 4%, but now it's starting to like tailor up. So that means it's going to give another shot with interest rates. And this article kind of plays into that, what I was talking about. A few things with this article too was interesting is pre and post pandemic Canadian savings. Very interesting because we knew, pre pandemic savings were always low. Everyone was like based on 2 weeks of pay. If they missed one paycheck, ultimately they would be defaulted on some bills. So then it was post or during COVID where people were saving a ton of money. Obviously not spending, nowhere to spend the money, holding the money in savings. And then now we're into a post-pandemic where obviously inflation record high, interest rates record high, and then now we're at currently right now the lowest Canadian sorry, there's a lot of noise here. Canadian savings is so the Canadian savings is lower than the pre-pandemic amounts. But let's listen to this lady.
Hello, thank you so much for watching Morning Markets. I'm Amber Canwar. We've got a lot to cover right now, but the number one thing at this moment is a fresh read that we got on Canada's economy. For the first quarter, Canada's economy expanded well above expectations. And once again, it was on the back of Canadians that were spending. Spending was growing at the fastest pace in a year. And how did we achieve that? Well, we were dipping into our savings. Our personal savings rate is now...
So spending, what are we spending money on? What are they spending it on? Remember, inflation, huge. Cost of groceries, cost of insurance, buying a vehicle, buying a house. Like, this is where I'm looking at here. And also, if you break it down, like, mortgage amounts, like mortgage payments, they've gone up. They've reversed into interest only. Like, there was a bunch of shit that happened just based on the interest rates, the policy rate being raised up. And that's what's basically robbing the Canadians' bank accounts.
At the lowest level since before the pandemic. Is this personal saving in a year? And how did we achieve that? Well, we were dipping into our savings. Our personal savings rate is now at the lowest level since before the pandemic. Is this sustainable? And what does this mean for the...
Yes, and that makes total sense. Just the cost of everything right now. Like, even us, like, we do well, but it's like we're spending a lot more right now than we're making, to be honest. We're obviously trying to build out 2 businesses right now. We're trying to revamp them, but it's a ton of money being spent, and it's just basically everything. Service, anything you're buying, it's the cost of everything is just insane. But it is what it is. I think there was a good part of this article I wanted to read out. Statistics Canada recently reported real gross domestic product grew at an annualized rate of 3.1% during the first quarter. So this was supposed to be a lot less. Job growth stayed, or what do you call it here? So the job growth was pretty high. The Where is it here? Yeah, this is just kind of reiterating what I was saying. Canada's strong economic results are odds with the expectation last year with interest rates would push the economy into a recession. Instead, economists are now speculating the Bank of Canada will raise rates in July. Yeah, so there's a ton of stuff happening here. Oh, here it is. It's wages. Um, Canadian labor market stayed consistent at 5%. They need this to go, as bad as it sounds, they need this to go up in order to kind of correct the inflation. Um, but it is what it is. They got a bunch of stuff that's going to be coming down the pipe. And again, and uncertainty. Obviously, if you're buying and selling real estate, if you're trading one investment for the other, it's all good. For me, obviously, we're kind of holding back with purchasing any investments right now because there's still a bunch of shit coming down the pipe regarding commercial and stuff like that. So we'll see what happens. But we're still very bullish on the Florida market, and I'll tell you why. As you all know, that we're basically getting into development. This was the whole point. That was the whole point here in Toronto. I had my Terrion license at the just literally got it in like 21 and ready to go. I had my building lots ready to fly. And then this market turns, and it's just like, forget about it. It's just the cost of development charges, the cost of building, the cost of everything, and then the market, fell through, and it's just like, there's no profit. So I'm basically putting a shovel on the ground and make an Instagram post that I'm a builder developer, which I'm not interested in. I'm in this to make money naturally, right? So what do? We sell most of those lots off. We're selling another one now, hopefully, and then we're going to move this money out to Southwest Florida. There's obviously a huge demand of new families moving into the area, and the cost of development's a lot less. We can get away with like 120 to 140 a foot. The construction itself it's different naturally because you're slab on grade. You're building on high water table. You're going to probably be building on a canal. There's things to get used to in that terms, but ultimately it's construction. It's not like out of the abnormal what I'm used to. Let's just say I understand it quite well. So the good news is right now we're kind of looking at the cost of material. This is very good. Well, look at this. So now we're down $344 a one board foot. So how that measures is 12 inches thick, right? Length and depth. So basically it's like a cube, and that measures at $344 for that cube. If you look to the height, this is, well, look at COVID, right? So COVID comes around here, March, boom, it flatlines this lumber cost down to $260 because like all of us logically thought that construction would not be built and everything would be put on hold based on the pandemic, and we were all wrong because then it just went nuts. Look at the height here. Like imagine building a house around this time. So $1,686 a board foot. Like what does that equate to? If we're at 344 now, it's almost 5 times the cost of what you can get the material today. So imagine you're building a house that costs you $100,000 in lumber. Is it $500,000? Is it $400,000 more than what you anticipated? It's just wild how that went off. Then we had this drop off in August of 21, which was good, 468, and then still it pumped up right here. This is the height of of inflation, even though that we had higher prices here in 21, but this was the height of our inflation here, and then we started having this nice drop off. Clearly the market started correcting, and now we're at $344 a board foot, and that's 41% down from the 5-year mark. But let's say even a 1 year, it's 44%. We had all our growth between here 20 and 21, and now we're back to, let's say, 2019 prices. Let's just take a look at this. Sorry guys, it's boring, but I want to be specific with this. So around that amount's around here. So like January of 2019, let's call it. When was the last time we seen, or here? 2018, September of 2018 were these last prices. So we're basically September 2018 prices, which is great. Why is this great? A few reasons. Like if you're building a house, cost of development, the material cost, and your profit on top. what's good about this is that it keeps the house affordable. So your end user, people that are buying the houses out of necessity, are not getting slaughtered, and you're not getting, let's say, a house in Southwest Florida, especially just north of us. You're going to get into houses like at 360,000 USD. You want them to stay between that 350 to 400, 420 mark. You don't want it to get any further than that, because affordability, then you have no buyers for these houses, and the people that want to have the money to spend like this don't want to move to these areas, so you're going to have like a mixed balance. So right now, as long as the lumber rates stay low, like the material costs, you can still tack your obviously your profits on top, and then still have your many end users buying the same product, the same pricing, which is great. So you can have like an endless stream of revenues, many houses you can build. So yeah, that's our goal. We're gonna probably buy in end of August into September. We're going to buy land. We've already sourced out an area. Mike's actually coming on board with this project too, and it's going to be fun. We're going to have a good time doing this, and we're going to just muscle right through this. I don't care if the market's going to collapse, if it's going to do well. I don't care. We're going to put a shovel in the ground and we're going to build, and if it doesn't sell, we're going to just rent the bloody thing out. But it's time now. I'm 41 years old and we got to get building, so no more excuses on our end. So that's pretty much it, guys. If you have any questions regarding real estate here in Toronto or in Florida, please reach out. We have obviously a team here in Toronto and a team in Florida, so you're well taken care of on both ends of the North American market. So have a great day. Ciao.